In this video, I'm going to share with you my step-by-step rules-based trading strategy that has earned me over $50,000 in just 90 days. This is the exact strategy that all of my inner circle members use, and here is a sneak peek of some of the incredible results that they've achieved trading this exact system. In this video, I'm going to walk you through 4 case studies of real trades, step by step, that both myself and all of the inner circle members took trading this exact system. These trades were taking trading Momentum Mastery, which is my fully rules-based mechanical trading system that takes all of the guesswork out of trading. You're going to get so much value from this video. Let's dive in. Okay, so the first thing to note is this is a one time frame strategy, and all of your analysis, your execution, everything is going to be on the 15-minute time frame, and the strategy can work on Forex, futures, and all other markets. Okay, so it's very important to note that this is a fully rules-based mechanical trading system that takes all of the guesswork out of your trading. And what I've done is I've broken the system down into 4 simple steps. Step number 1 is directional bias. This will be determined on the 15-minute time frame. Step number 2 is a session manipulation. Step number 3 is confirmation. And step number 4 is our stop loss and take profit placement. So every single trade that I personally take follows this framework right here. And this is the exact framework that has allowed me to get funded over $1 million. It's really important that you pay very close attention and that you follow every step closely. So you can't miss any of these steps out, and all of these rules need to be aligned in order to execute a trade. Okay, so we're looking at gold on the 15-minute time frame. And a huge problem that so many traders are facing is they're using subjective ways in order to identify their bias in the market. So this could be in the form of a daily fair value gap. This could be in the form of a 4-hour order block. There's many subjective ways in order to identify a bias in the market. The problem is a lot of these are subjective. A lot of these are using guesswork in the market. And what ends up happening is it starts leaving you confused. You don't know if this is a valid POI, so a valid point of interest in the market. And so often this leads to traders feeling very overwhelmed. And so what I recommend doing is simply using a 50, 100, and 200 exponential moving average. And so for example, when the 50 EMA is greater than the 100, which is greater than the 200, this indicates to you as a trader that we have a long daily directional bias, right? This indicates that momentum is to the upside, and so you would only be looking for long positions. So this helps take all of the guesswork out of trading, because you turn up to the market, you're looking at the market, and you're like, okay, I'm long bias. This is my bias for the session, or this is my bias for the day, and you know that straight away after literally 2 minutes of looking at the market. In order to apply the exponential moving averages to your chart, head over to the indicators tab at the top of your screen, click this, and then type in EMA 20, 50, 100, and 200. So this indicator right here by Dr. Sweets. Click this, add it to your chart, add it to your favorites. And then what you can do is double click the indicator. You can uncheck the 20 EMA. And then you're left with the 50, 100, and 200 EMA, and you can color coordinate these if you wish. Then click OK, and you're all set and you're all good to go. Okay, so I've removed the EMAs, but please keep in the back of your mind that we are long bias on this market. So step number 2 is a session-based manipulation, and this is also known as a time-based manipulation. So this is literally where time meets price. And so what you can see right here, we have 3 sessions on the screen. Session 1 is the Asia session. This is from 7 p.m. until 12 a.m. midnight. This is Eastern. We have the London session from 3 till 5 a.m. Eastern. And we have the New York session from 8 a.m. until 10:30 a.m. So we are only going to be looking at executing trades during the London kill zone, during the London session between 3 and 5 a.m. And we're going to be executing in the New York session, the New York kill zone, between 8 a.m. up until 10:30 a.m. Eastern. We're not looking at taking trades outside of these windows. And so these are going to be the sessions that you're looking at trading. You might only be able to trade the London session. You might only be able to trade the New York session. Whatever you can do, stick to that. And that is the session that you trade. We are not looking at executing during the Asia session, because often this is when we get a lot of consolidation in the market. Not always, but often the Asia session does accumulate. And so what we're looking for, so because we are long buyers on this market, we need to identify sell side liquidity in the market. And so right here, you can see we're heading into a New York kill zone, right? This is 8 a.m. right here. And so what we need to do is we need to mark on the previous session's highs and lows. So because we're bullish in the market, we don't really care about the previous session's highs. We really care about our previous session's low. So we have the London low right here. And so what we're going to be looking for is a manipulation lower below this London session low. This is what we call a session-based manipulation, also known as a time-based manipulation. And then we can think about getting long in this market. What this is going to be doing, so when price does come below here, once price does manipulate below here, what this is going to do is it's going to do two things. Number one is this is going to stop out any early buyers, right? So if you buy in the London session, a lot of traders are going to have their stop losses below the London session low. And so this will be stopping them out, which will force them to buy at current market price. What this will also be doing is traders will see this as a breakout to the downside. And so what a lot of uninformed traders are going to be doing is they're going to be looking at shorting this breakout to the downside. And this is going to create a further inflow of sell orders into this market. So essentially, when we see a session-based manipulation, this is trapping a lot of traders on the wrong side of the market, and it's stopping out any early buyers. And so they will not be participating in this market. So this right here is your session-based manipulation, where we see price come down below the London session low, right? This is the London session between 3 and 5 a.m. What do we see, right? So we see price come down, lower, lower, lower. We then wick below the London session low, and we close back inside the range right here. One thing to note is we don't care if we close below here, right? So we can wick below, we can close below. It doesn't matter to us. And then this leads us on to step number 3, right? Which is confirmation. So we're long bias, we've seen manipulation. And so all that we're waiting for is a 15-minute bullish candle closure. And this has to occur during a kill zone. So for example, right here, we're trading the New York kill zone. So this confirm needs to be between 8 a.m. Eastern up until 10:30 a.m. Eastern. So this candle closed at 9:15 a.m. Eastern. But note, we're not entering on the closure of this candle. We're entering as price breaks the candle high. So this is your candle high right here. We're going to be entering via a buy stop in the market. We're not entering on a market execution. And we're going to set our buy stop just above this 15-minute bullish candle high, ensuring that you're accounting for spreads in the market. So then what we're going to be looking for is the next candle to open up. So it opens up right here. We're then looking for momentum to step into the market, the next candle to break this confirmation high. Then we're going to be tagged long into this trade, and we can look at targeting higher prices. But all of this pretty much doesn't make any sense unless you know where to place your stop loss and where to place your targets. And that's why step number 4 is stop loss and take profit placement. So stop loss always goes below the manipulation low. So in this example, the manipulation low happens to be the low of the confirmation. And then what we do is we look at targeting a mechanical 1 to 2 risk to reward. So we're not looking for a home run. We're not looking at taking huge amounts of pieces out of the market. We're just looking at taking a small bite-sized piece out of the market over and over again in a consistent basis. So as you can see, we were tagged long in this trade right here. We got some drawdown towards the stop loss, around a 50% drawdown. And once you're tagged into these trades, we need to set and forget. So we're not looking at micromanaging. We're not looking at interfering. It's just a case of allowing these trades to play out. And there's many times where traders may have went wrong here, right? They may have got emotional. They may have closed early on this drawdown. They may have even closed on these drawdowns right here. But it's very, very important, and it is absolutely vital that when you're tagged long in a trade, you just allow the trade to play out. And you understand that you have around a 50% win rate with this system right here, and with a 1 to 2 risk to reward, that is absolutely amazing. right? Because with a 1 to 2, anything more than a 33% win rate, you make money over the long term. And so this right here was a valid A+ trade. And for anybody thinking that I'm cherry picking this trade right here, which to be honest is a fair assumption, here is the analysis that was sent ahead of time to the exclusive community. And here is the exact execution of this trade right here. And so just to recap this trade right here, right? We have a bias, right? 50, 100, 200 EMA. We have session manipulation. That is this right here below the London session low. We have a clear confirmation during a high volume session during the New York kill zone. And we have a clear reason to enter, right? We enter on the break of this high and we have clear invalidation below the manipulation. And we look at targeting a mechanical 1 to 2 risk to reward, which takes all of the guesswork out of your trading. Okay, so we're looking at the US 500 on the 15-minute time frame. Now let's look at another trade case study. So again, step number 1 is what is our bias, right? Are we bullish, bearish, or have no bias in this market? So we go ahead, we turn the lights on, we put the EMAs on the chart. What do we have? Well, we have the 50 EMA on the bottom, the 100 EMA in the middle, and the 200 EMA on the top. So in this example, this indicates to us that we have a sell bias market, and so we should only be looking for shorting opportunities. Step number 2 is we need to see a session-based manipulation. Well, what I'm going to do is I'm going to go ahead and mark on, because we're bearish, I'm going to go ahead and mark on the previous session high. So if we have the Asia session high right here. And so in order to look for a shorting opportunity, we need to see price manipulate above a previous session's high. And then we can think, literally just think about potentially shorting this market. So this right here is your session-based manipulation. What this is going to be doing is trapping traders long, thinking that this is a breakout to the upside. And this is going to induce a lot of long traders into this market. What this is also going to be doing is any traders from the Asia session who are positioned short in this market, a lot of early sellers, they're going to have a stop loss, or some of them will have a stop loss above the Asia session high. And so this is going to be stopping them out. So if you're short and you're getting stopped out, what this is going to be doing is actually forcing you to buy at current market price, right? Because if you're short and you get stopped out, the only way to get out of a short position is to actually buy back at market price. And so this is why so many more orders are going to be getting long into this market. This is ultimately what provides the liquidity and fuel for the bigger players to actually move the market in the intended direction, which, as we know, this is a sell bias market. And so it's more likely that this market continues going lower, right? Because we're trading trending assets. Okay, so we've witnessed the manipulation above the Asia high, but we don't know how long this manipulation is going to last, right? This could keep continuing higher until we see a confirmation. So we get our confirmation right here. So this is our 15-minute bearish candle closure, and this is during a London kill zone, right? This is 3:45 a.m. Eastern, right in the middle of the London kill zone, right? We're expecting volume, we're expecting volatility, we're expecting clean price action. So step number 3 is this is our confirmation right here. We can enter on the break of this confirmation candle low, and this is going to be via a sell stop in the market as price literally breaks this low. So my order was just on the break of this low. And so step number 4 is, well, what is our invalidation, right? When are we wrong on this trade? Well, the manipulation high is literally just above this candle high right here. And then we're looking at targeting a mechanical 1 to 2. So again, we're not looking for huge amounts of distance out of this market. We're not looking for a home run here. So I was tagged short in this trade right here. And then it was just a case of setting and forgetting this trade. And as you can see, within 1 hour of being tagged into this trade did hit take profit for a 1 to 2 risk to reward. I want to be honest with you guys. I want to be fully transparent. Not all trades are just going to fly straight to take profit. A lot of trades, you're going to get drawdowns. You're going to think that, this might not be the trade. It's going to really test your patience. It's going to test you to pretty much absolute breaking point and then it may roll over. Okay, so not all trades fly to take profit. I want to make that very clear and be very, very transparent. Again, anybody thinking that I'm cherry picking this trade, here is the analysis that was sent ahead of time to the exclusive community. And here was the exact execution of this trade in real time, which was sent within the Discord server. Okay, so now let's have a look at case study number 3. We're looking at gold on the 15-minute time frame. And we can see the 50 EMA is greater than the 100, which is greater than the 200. So this indicates to us that we have a long daily directional bias. And so we need to identify our session-based manipulation. So looking at the sessions right here, you can see we're heading into a New York kill zone. And because we're bullish in the market, we can go ahead and mark on the previous session's low, right? So we have the London low right here. And so we're looking for price to come down, manipulate below the London session low. This is going to stop traders out, anybody that's long in the market. And this is going to induce a lot of traders short into this market, thinking that this is a breakout to the downside. And these are a lot of uninformed traders that don't understand the bigger picture. They don't understand context in the market. And so we're looking for price to come down. As you can see, we're heading into the New York kill zone right here, 8 a.m. Eastern, and we start to see the manipulation. So this right here is the first candle that manipulates below the London session low. And so we've seen step 1 and 2, right? We have a bias, we have seen a session-based manipulation. Now we're just waiting for a 15-minute bullish confirm during a kill zone. This is exactly what we get right here. You can see this is at 8:45 a.m. Eastern on the closure of this candle. We get our bullish 15-minute confirm. And so we can enter on the break of this candle high right here via a buy stop in the market. So this is going to go just above this high right here. Invalidation, step number 4, always below the manipulation, right? We're not putting it in no man's land, right? We're putting it below the manipulation, allowing the trade to breathe, and making sure to account for some spread below the low. And then look at targeting as always a mechanical 1 to 2. We're not even asking for price to take out the London high, right? As you can see, this trade is literally within the range, and we're just looking at taking this small piece out of the market. So I was tagged long in this trade right here. We got a pretty sharp push to the upside, and then we actually got a little bit of drawdown right here. And what we got was the NYSE Open. So this is what we call the New York Stock Exchange Open. This is at 9:30 a.m. Eastern. This is when we expect volume to come into the market. And so we were positioned ahead of the NYSE Open. And this is often a very common question that I get asked, right? Is like, why don't you just wait for the NYSE Open? Well, the reason why is because we have so many confirmations, we have so many confluences and rules that have been met that gives me the confidence that this trade is going to go higher, right? We have a bias, we have seen manipulation, we've seen everybody getting stopped out of this market, we've seen a confirmation, we've seen momentum stepping into this market. And so how many more confluences do you actually need to just get involved in this trade? I think a lot of the time, a lot of traders talk themselves out of actually taking a position. So yes, a lot of the time we're going to wait for the NYSE Open, right? And this is just because this is when the trades often set up. But if you have all of the rules that are met and it's just before, well, when you have conviction and confidence in your trade, your rules and your system, that allows you to enter into the market ahead of the NYSE Open. And as you can see, this trade did hit take profit for a 1 to 2 risk to reward. And we did ultimately take out this buy side liquidity that was resting above the London session high. So we actually got a pretty significant continuation higher, and price ran around a 1 to 6 risk to reward. But that's not our plan, right? Our plan is just to take this small piece out of the market, this 1 to 2, this repeatable risk to reward that we can quantify, where we can set up the conditions on a consistent basis and set the parameters where we know our win rate with this system. And so this was another validate plus trade. Again, here was the analysis that was sent ahead of time to the exclusive community. And so you should be getting the point that, I am actually taking these trades every single day in the market. Okay, so now let's look at US 500. And bearing in mind, all of these trades that were covered, these were literally over a 2-week period. And this trade was actually taken on the same day as the trade that we just looked at, right? So what can you see? So US 500, 15-minute time frame. 50, 100, 200 EMA, bullish. So we're bullish in the market. We're trading the New York kill zone, right? We need to identify a form of sell side liquidity. This is your sell side liquidity right here, below the London session low. So what we're looking for is price to come down, manipulate traders below the London low, and then we can think about potentially getting long in this market. So this was the trade plan that was sent ahead of time, right? As you can see, we were looking for that manipulation below the London low. This was to let all of the exclusive members know like exactly what we're looking for. And so what do we get? Well, we got this large liquidation candle right here. And then we also manipulate below right here. So this is getting towards the end of the kill zone, right? This is at 9:45 a.m. Eastern. So this is after the NYSE open. We're then waiting for our confirm. This is the confirm right here, right? So we've seen the manipulation. We get the confirmation right here. We can enter on the break of this high right here via our buy stop in the market. Mine went just above this high. Invalidation below the manipulation low. And this example is right here. And again, as always, targeting a mechanical 1 to 2. So again, we're not asking for huge chunks out of this market. We're not asking for a home run here, just this small piece. So I was tagged long in this trade right here, and this was crazy. So as you can see, we started pushing into profit right here, and this trade literally flew to take profit. So this was the final trade of the day, and this actually ended my day at plus 6R. This was a day that, I will be honest, marked history at Toto Capital. And this was a day when we had 3 winning trades in a row, right? Bearing in mind, we average around 3 to 4 A+ setups a week. We had 3 winners in literally one day. So this was an absolutely monumental day. This was an absolutely astronomical day. And I want to be very clear and I want to be very transparent. This is not something that happens all of the time. But it's important that you're equipped with the skills, with the knowledge, with the rules, so that if it does present, well, next time you're going to be there, you're going to act without hesitation. And so this was another valid A+ trade. And here was the exact execution of this trade right here. Is the exact trading strategy that allowed me to make over $50,000 in just 90 days. And this is also the exact system that allowed me to get funded over $1 million in verified prop firm capital. And so if you would like to learn more and you would like to see me trade this live every single day in the markets, with my exact game plans, trade plans, market executions, where I've put together over 40+ educational videos, walking you through absolutely everything step by step, and you would like me to hold your hand every step of the way, then make sure to check out my exclusive community or my one-on-one mentorship. The link is in the description down below.